This is in line with the general banking sector trends, and it's across the globe where the guidance is still positive. We have seen kind of a mixed bag, but the big banks have shown the same kind of results. But yes, as you said, U.S. consumer is more of an issue that we have to see that U.S. consumer has spent most of their excess savings, and the personal savings rate is less. And then the higher interest rates obviously have an effect on consumer spending. But overall, we see the guidance to be positive, and we'll have to see how the interest rates movement pair forward for the next couple of quarters or next year, and that will have an effect on interest rate sensitive sectors like the banking sector.
That's right. You mentioned interest rates, and we will continue to hear from the various central banks this week, the Fed, the BOJ, as well as the BOE included. As we talk about these interest rates, let's also talk about the market and how what we're waiting on. The FOMC, they could be signaling in July for a cut in September. Fed is expected to stand pat for one last time. How are you positioning ahead of the big meeting?
I think yes, both the stocks and the bond markets indicate that the Fed will be lowering rates sooner rather than later, because if the economy starts to slow, the financial conditions will start to tighten as the sort of recession risk increases. And at that point, Fed might be late in the game in adjusting the policy rates. So I think, and even on the communication part, I think Fed has done a good job now. And with the inflation going in line with the expectations, yes, we are also expecting that we might see a rate cut in September. But whether it will be one rate cut this year or two, probably one in December, that we'll have to see based on the inflation and the economic data.